Everybody, or just me? Oh, we got one person in here. All right. This is live and it's recording. I had some waiting room music on. I'll put a timestamp if you guys want to skip ahead, but that's exactly why I had it on. Tim, can you see my screen?
I can. Happy Friday.
Okay. Great. So yeah, I mean, yeah, this was every day is a puzzle. You know this? I mean, you're starting to, and the frustration that you have with like trying to put a system on top of something that's completely random is difficult for the human mind. It likes like repeatability and it likes certainty, and it's like I just embrace the uncertain and have just seen, just like the way that the system can actually help us stay out of things and see it correctly and identify mistakes. I mean, it's pretty incredible. Um, the way that it can balance itself out. So let's go to the daily real quick here. Right. So, right, we talked about this pattern before it manifested was an inverse double bottom, right? That occurred. There was a hook from extremes, right? And then we get like a pattern where you're thinking, wow, this is a bullish engulfing. It has potential to potentially become, because this is a mature enough bounce to possibly be a bounce breakout, right? I mean, look how long this bounce took before we had so you had to go sideways first and then for a trend, then sideways trend, sideways down. And after down markets, it can go sideways again. So, right, the next day, so out of all the probabilities, the thing that stood out the most, like it's not just like you add up those things, it's like which one stands out for you too. It's like you can give them magnifications. Obviously the candlestick pattern was pretty important on this day, right? The CCI wasn't, right? The CCI was pretty important on this day because a setup manifested. So it's like you take everything with a grain of salt, and that's why it's like this kaleidoscope where probabilities are changing and things are dynamic. That's why I call it what I really do is contextual analysis. I've tried to put it over into those snapshots of the system and Corby's system to give people a way to fill that out and do it that way, and that's definitely the way to do it. I have so many sheets where I paper traded and filled out that thing for years. But then you start to become so good at it. It's like your warmth is like I do a daily call. I literally every time I do a snapshot, stand up, I can go back 5 minutes and sit down and I can see it all again in my mind. Right. So it's like, right, there was this potential for a bounce breakout pattern, which was actually higher up here. Right. But we're not totally out of the water yet because we can drill down on smaller time frames. I mean, you can kind of see it here, right? That we are at a bull bear zone. That's why I had this marked. Right. I shorted this day or one of these days and got something out of this, but I didn't short it into the overnight and I missed I think I shorted this day, went long here, and then missed this, and then I haven't done anything. I can't remember. Did I give a signal today? No, this was the last trade I took. Boom. So, right, it's like, so what do these zones do? It's like, well, this identifies, so it's like, even though they're all yellow, this one was the one that was actually given a weight of a bull bear. That's why I was sideways down for resistance. I mentioned that in that daily call the other day, where I had mostly sideways up on this day, but I also said I feel like I should short the bull bear resistance zone. That category was down. Now, once we got a sideways day that didn't break out and it broke underneath this, that's when the next day has higher odds to be sideways down. So if you have a trend up day in a V, so at least the next day, if you go straight line into a strong zone, you could get a reaction. That's why that was a good. That's why I said I feel like shorting it for a tradable reaction, which I did. Which is I didn't think this was going to be a reversal on this day because it had low odds to go up and then down like today. But right, but then the next day, like I said to the dude, his avatar, um, is that now any longs on this day they're way more risky, and we should have been short again. Really, I was asleep. This was at 4:30 in the morning, at 3:30 in the morning. I know to short that in the system, but to like be up and to like put an order on and to have adrenaline, it's like a whole other game. It's so stressful for me to go long on size. I'm not kidding. Every time I press a button, and the patience not to go long. Like I woke up and instinctively, like, oh God, we're at the zone again. I'm like, no, calm down, slow down. Like, let's go through all the things that we look at. And I was like, yo, we're waiting on this, right? And basically told everyone to sideline today if you weren't short because we're coming off the bull bear resistance zone. And the way that it got down there on this day was that it balanced and then it broke down into it with plenty of range left on the day. And if you look at the daily, why couldn't we get a pullback continuation pattern where we pull back to the 20 moving average? Now, we don't, in my opinion, right now, that pattern has failed, right? Right. We knew there was going to be a pullback. It's just that this is a downtrend day. So it's like the sustained momentum real time is like you're not fading anything. And also, this is not a wide double bottom anyway. If you were thinking about going long, you should, if at the very least, when there's momentum. Now, yesterday, I planned this trade out, right? For most of the day, I did take a double bottom. Like, even though I'm aware that there's higher odds today that we could get a downtrend if this fails, because like this day, we had a sideways day, false breakout, now back into a bounce that was 1, 2, 3, 4, 5 days. So it's like, yeah, you're not going long when you see this momentum in the market now, right? That's when you need to read it real time. It didn't bottom build. It broke the low, and you got that. And the shorts work out a lot quicker than longs typically, especially in this type of market. So you go on the daily. What we're hoping to get is, obviously we can maybe even cheat a little bit here, but higher high, right? We need to see how this closes. I also talked about today that we don't have see how this setup is a zero line reject, a really good one. Almost even a hook from extremes because it broke through, but they work really well. Just go back and see, like, this is an inverse zero line reject, and look, there was a short setup because like on that day the CCI should get away, should get more of a weight. On other days, just mark it sideways because it's not going to do anything one way or the other, and don't give it a weight of two. Like, I mean, there's some of these are so pronounced. Like, why wouldn't the hook from extremes on this day, stand out a little bit more? Now remember, like, be patient. Like, on the first time there's momentum down, the candlestick pattern tells you to go down. So why can't you have a few days of bottom building before it turns? And like, I constantly say these things while I'm even on, because the markets are fractal nature. I said the same thing over here. I'm like, we started up here and we had intraday. Yeah, the bearish bias was in control that day. But was this a typical downtrend day? Like, we stay out of the market, we stay out, we don't short this, we don't go long here. No, this is a day where, like, they brought it all the way up here. I almost was thinking about shorting that. It wasn't quite at the high of the day, but there's a downtrend bias. That's where the intraday bias comes in. It's not that the same momentum is really downtrending at that point in time. It was when I went long. If you went long here, right? It was when I went long here, I planned out that if it hits this zone. Now, this zone, it was a risky limit order to put that, but what did it have is a magnification. It had good support at this moment in time, right? Because the trade location was now not like at this thing, or it had this high volume node, it had this high volume node. On first test, on a day with below average relative volume, where we know previous days it snapped back up, why couldn't it snap all the way back up to the VWAP for a trader? So I said that. So in my mind, when I take that setup, it's a zone fade for a tradable reaction. It's not a wide double bottom or something like that for a reversal, right? Like, this would be a wide double bottom for a reversal. And even if you miss this, the next day when you see a V, get in on the shoulder. These are things I'm telling myself. This was also at my support zone. This would have been a mega trade. This was at what time? Yeah, see, for me, I know these things and I see them, but to like stay up and do it at 3:30 in the morning and look for it, it's tough, right? I mean, I would have had to just buy. I thought about just buying right at the open on the hook and having a stop below the hook, and then that's sort of like a buying tail or a head and shoulders upside down, right? Now we were just around here, right? Price went all the way down here, right? And there's a tail. So you're saying, oh, well, it's close enough this for trade location where we could get tradable reaction. That's true, and maybe the old me would jump in, but it's like, I'm not going to fade against downtrends in this market, and I'm not going to fade against uptrends. Yeah, you could be clever, and if you went against an uptrend and you see how it's rising in agony, and you saw support here and you did a little thing here, but why would you take a risk to get a place where it's more likely a pullback continuation for the longs who are in control and have a wide stop? It's just, you don't want to get in this for a thrill. That's where the mistake where people get too comfortable paper trading. You'll have a higher hit rate and be better paper trading because I took 10 trades today. Who cares? Like, I had to tell a guy that do that. Like, you can't think about paper trading. Like, you have to imagine that it's like a lot of money and it's stressful. You don't want to do that. You want to wait and really be patient for good setups. This, after a trend up day, I always say the next leg around here or here is going to be an automatic long. That this is a system. I've seen this over and over again. I didn't take that. What time was that at? Yeah, see, I'm asleep practically. It's like the limit. I just got to get into a flow state where I put in these resting orders based on these things that I'm writing ahead of time, rather than when I see them in real time when I'm on in the morning, I really can scan pretty good. But that's when set like this isn't really a setup, right? You know, right? The low that's at the low extreme a day and it's hitting this low, right? But this support zone took us to here. It took us to here. It took us to here. That's that measure of kinetic energy. What is the bias on the day? It's down from the rotation down. Let's examine this resistance zone that I call the bull bear. Wow, it took us all the way down here. It took us all the way down there. So it's stronger. It gets a stronger weight. And even though I can you can a little bit on a sideways, I scalped against it a little bit. It's like I have an awareness that, okay, this is probably not going to reverse because we needed to break out above this balance to create a balanced breakout pattern. So I wrote about this the other day, and I said if it breaks underneath this, it has good odds now to test somewhere in the lows of the balance. And we're getting there. It is hard psychologically to see a potential balance breakout pattern, have a lot invested on the long side, and then say, okay, now I got to short this. But that's exactly what you have to do. And if you're having trouble because you're also investing in this shit, then just make it go upside down and say, hey, we're at support. I have to shorten it. Now, if you went in long here just because you have the low extreme of the day and you have trade location and you see a little thing, I mean, you are fading against now clearly a downside trend day. There's momentum, there's sustained momentum. You're near this launching point of directional conviction, but you're kind of cheating up here, where you're like catching this swing high here that we broke. You know what I mean? It's not that great. That's why I didn't even mark it. So there's nothing wrong with just being patient, in my opinion, seeing how this day settles, because there was lots of opportunities to fade against this trend. So, oh my God, here we're bottoming out now. We're near these lows. If you wanted to mark that as a zone, but that's when you have to balance it with, hey, I did a pre-market analysis and I marked on my daily call sheet that this was a higher resistance than support. And I keep saying that in real time. So that's sideways down. So you should have been short. I shorted this, but if you didn't get in on overnight, you missed all this. But I did catch that and then got out. And then I was like seeing it at this point in time when I took 25% off, I'm like, man, I should probably look for a short right now. It's like, oh, I'm so tired. Maybe it'll get to 93,585 and then I'll go short again. And then I was like, that's when the move, and then it's like you just missed a huge amount of money right there. And that was the correct move because we closed underneath balance. So the bigger picture pattern on your daily call sheet is now not a bounce breakout because we closed underneath balance again. It's now becoming just a larger trading range. And the odds are is that it can test the lows of this range. It can go right back down here again. Right? Now we have pretty strong support in between. We'll see how this goes. And you can see kind of the directional support here. Right? Hammer candle after the buying tail. Missed the buying tail because you were nervous, and the next day you go sideways up. This day was I was a little too cautious because we saw the buying tail and I was just like, well, yeah, you could wait for that, but just get in there and then you might miss it, and then we missed it. Right? We have to see I want to see an inverse zero line reject to show me that this momentum stalling somewhere near, and I would even possibly get aggressive with something on a smaller time frame because there is this directionality to it. But make no mistake about it. I mean, this could also go back and try to form a triple bottom. So you have to just look at all the sides, wait for the dust to settle. This was a much better idea because you had a hook from extremes and you had that first test double bottom called the dynamic inverse double bottom. And now this is not really a pattern that we teach, right? It's not, it's ugly. It sucks right now, actually. I was really, really wanting a bounce breakout pattern, but also at the same time, if you just look at this, I mean, this isn't that long. If you just, just as a crude measurement, just human behavior, right? I mean, anything can happen, but I thought maybe we have a shot to this, and then my higher odds was we were going to have then get something like this, but at least get to that. And that still could happen, but um, I cloned this for on the y-axis, and that is about from here to here. So it's like if you want to just imagine it, trend. I mean, this could be considered the bounce, but sort of this is when I think the lows were in. Possibility for that, possibly here, and then we're only here, right? And it didn't get quite down to here, but you have to wait for that confirmation now because you don't have the trade location. So and the other thing that helps you gauge is just like gauge the breadth of the other market. Um, you know, this was the first zone, but you have to have some. Even if you made like a sideways call, if you made a sideways down call, then you're great because you just would hold through everything after you took out your risk. You wouldn't be tempted to say, okay, this is initial support. Is it going to make a double bottom there or something like that? This one was tougher because it was first test. And it was a resting order, but first test can have really good odds for a reaction. This was a quick finance up here and then 25 off here because of the confluence of, not just this, but like past time. Now, and the way it got there and the fact that we could still build, like I said, I define a mature balance as, you want to like a couple of days. Like, this would have been only one day of bouncing and then it as a trend down day. As we came down here, I'm thinking that I'm like, wow, the balance is more mature. And this is why I didn't give a signal on this, even though it was initial support. And I just was patiently waiting because it broke. It's not like my odds, my gut feeling base was that it was going to break down because of the way that it got down here, the bias on the day, and that it was a mature bounce, and that this resistance zone was stronger than this support. And that's just how price behaved up here. And the bigger picture pattern failed, so you have a bearish bigger picture pattern now, which is now just an extended trading range, which has the odds to go test the lows of bounce. So it's not a breakout pattern. It's it would have been better if we got like a crazy tail like this here that then closed underneath there. That I'm telling you, stay up any time of the day. The pop on the shoulder is the short, right? Now this one didn't work because really the real highs of this balance are technically here and even here, right? That's why I had this one marked as a possibility, but I had the clone on this as the balance because there's enough touch points from here, here, right? And 2 days of this that, or maybe even I had that before after the first test of this close. Yeah, I did. After this close, there was multiple confluence here where like, okay, this could be the balance now. But you still have to have different scenarios. Like if it breaks out here, yeah, it did break this bounce. It could be a balance breakout pattern, but you still got to go through this sucker. I mean, that's just the nature of it. So it's like you would take profits there. And if you just go back in time, yeah, it's like the way that it behaves. You were at support here, but the momentum is so extreme, just stay out of it. Saves you money, right? Even you might be tempted here, like, what if we get this big move? Like, what if we don't? I'm telling you, on this 30-minute time frame, in the heat of the moment, if we go like, let's say I have the hour, I have the weekly, the hour, I have the weekly, the daily, and I close the weekly down, then I just look at the daily. The daily was actually pretty helpful to stay out of these support zones because the moving average was much lower. At the same time, you keep this there because once this breaks this with conviction, you're going to get a bounce breakdown pattern on the shorter time frame. You can even think fractally like that because like the markets are only moving in trends and balances. That's all they do. They trend, they balance, they trend, they balance, and then once in a while they balance and maybe do a reversal like a climax. But those are like this V, and this that. And most of the time they trend, now balance, and they trend far less than they balance on all time frames over years, decades, because the nature of markets is really to go sideways and just agree on a price of transact. Right. And this is why we're staying out. Like you have to just recognize that your instinct to catch some type of reaction is based against the fact of a 90% statistic that a day with this much momentum, where the sustained momentum is bearish, the intraday bias is bearish, You knew the resistance was bearish because it was a bull bear. You should have shorted it. I'm not saying the execution of it was easy. We all got to sleep and all that. And it's just psychologically tough to follow this system because it's all counterintuitive. And you probably would have marked the bigger picture pattern as at least sideways or sideways down. You would have not marked it as a bounce breakout pattern. I did prior to uh, us going up there and topping, and then I switched. I said, okay, now that we close underneath this, this could be a balance. So that's why you have to do it at least once a day. But don't think that a daily call, like because you're asleep at 8 or whatever time you trade. Some people, they have to do their daily call for a market that opens, and there's they're on the other side of the world, so their time is all messed up. So they trade in crazy hours, and then that's just when they do their snapshot. What is tempting, or I guess what is more difficult about that is that there is this benefit of you don't have any idea of what the next candlestick is to get this real neutral uh, type of opinion without any, because most people are not reading um, intraday momentum well enough to teach it because they don't have a scale that balances out pre-market with real market stuff. Or just like they, for some reason, they're fading against a downtrend. Well, you have a weight now, and you know that you can't do that. So on the rare chance that you do get some crazy V, you don't FOMO because you know that rule saves you money enough of the time over a large sample size of trades. That's really all you can hope for. So yeah, I mean, not every day it has to be like just the fact that you didn't take hits today is actually a huge win. It's amazing, because there's going to be other opportunities and you're developing the number one skill that you need to develop, which is patience. Patience and resiliency and trust in a long-term probability. Like you have to have faith and trusting in a positive expectancy strategy, which is essentially having faith in the unseen because you're projecting that skill out over individual ideas that are completely random. And that's what really messes people up. But, you know, if you're approaching this system in a way where I'm going to grow with it because it's holistic, because it's laid out, and it's like, how can I apply it better? You apply it better, like I said, by patience, because that's when the real-time data can take over. I mean, let's just say you made a daily call here and you're like, okay, I'm going to be sideways because maybe you could get to this moving average and it could at least form some type of balance. Like maybe if you were having the pullback continuation idea last night, you would have said, okay, it made a V. Now it's going to pull back here. I'm going to go long for the breakout. You know, that's a good idea, right? But at the same time, if you are having that idea after it comes up after you take in the intraday bias, right? Which is like I would just basically been showing you something on the daily to get you with this bigger picture pattern to talk about a larger time frame bias, which is basically right now we're in a situation where we don't have any larger time frame control right now as it pertains to day trading because on the one hand, we've been in the big picture bias has been down, right? I'm defining that in this context as like at least 1 to 3 months. It's clearly the bigger, this has been the bias, right? But at the same time, it's potentially at uh, an inflection zone where that can switch. So it's like, okay, well, if the big picture's down, then the intermediate term would be neutral, or the short term might be up, and the intermediate term might be sideways. So you don't really have any alignment between any of the time frames. So you're not really, you have to be kind of nimble, right? When it got near the major zone, at least that, got a higher weight. But what would confirm a larger time frame bias shift is when it actually breaks structure. It's like, okay, we went from a down market, now we went from a long-term mature balance, now we have a bigger picture bounce breakout pattern. Now the larger time frame bias is only going to be up. And that will affect your trade ideas because that weight will be more geared towards long. So you're more likely in the next, to mostly take longs. And that would have been the smart move because, yeah, you might have caught some of these, but it's like, I want to go long. I want to go long, maybe catch a runner. And then that's building that runners into a new market phase. But as far as Bitcoin being in a new market phase, that it's still in a sideways space. So who's in control of the larger time frame bias? What you're seeing is you're having this these bearish guys. A lot of them could be position traders that are selling now at break even, or just selling because we popped up into that. That is now confronting this higher time frame one, but it's not 100%. It's still in a sideways space, so it's not going to help you one way or the other. But you're open to the fact that it could potentially be a bigger picture pattern, but you have to do this idea called pattern, right? So when I did the snapshot earlier in the day, because we didn't break this moving average, and I went back in time and I said, okay, when's the last time we flipped above it? How did price behave? I said, okay, when we flipped above it, keeping in mind this wasn't the same time component, but still we basically bounced above it and then produced that pullback continuation pattern. So I said, until that's broken, maybe we can go sideways for a while, hopefully, and then we can get something out of it. But now that this broke, right, now you're thinking, okay, maybe this can produce a balanced breakout pattern, but you also have to take into consideration all kinds of different things, all the support zones underneath, but you're just keeping these principles in mind. Like the most important thing to do is like when you have a lot of conflicting information, you just stay out of the market. Then you just do another snapshot and come in with another plan the next day. And that's why the constant cycle of, doing it, 30 minutes to an hour before is super important to get that refreshment. So, yeah, do you have any trading questions? Or questions about the system? Anything?
Yeah, filling out the daily call for me, it's always problematic. Like it's not as clear cut as I think it should be. So maybe it's just me confusing things or making it more complicated than it actually is. But
Well, it's listing them out is one thing, and then having trying to. It takes a while to figure everything out. Like, so if you were gonna do one, did you do one last night?
no, I haven't done one in a couple days.
Okay, well, the example that I posted in the channel, was that helpful?
I'd have to go back and find that one. Yeah.
Yeah, I posted a couple of days, like maybe 1 or 2 days ago. I did a daily call with everything. We can go back and look at that actually. This thing. Oh, let me move it over here. So I did that one for 12/3. I did it on 12/2 though, you know what I mean? 10, 20, whatever time I posted it. Let's see. So I posted it at 5:56. So like an hour before the market opens. You want me to go through that? Did you happen to take a look at that one?
I did not see that one. Um, yeah, I guess so. Even like candlestick pattern, like yeah, if you don't mind going through it, like each
Yeah,
one of the things you're talking about seems like it's whole, like an entire discipline unto itself.
they are. So maybe it might seem like, oh, there's only 12 things on here or whatever. How many do I have? 1, 2, 3, 4, 5, 6, 7, 8, 12, 13, 14, 15. And then there's other things that I list that I go through in real time. And, yeah, that's a good way of looking at it. So let's go through candlestick pattern. It's for 12/3, right? 12/3. Okay. So I had this much data. So it's like the market closed around here. I posted this an hour and 4 minutes before it closed or something like that. I had this much data. Okay. Do you want me to start with candlestick pattern? It seems like you're super focused on that. I could start with that one for sure. But I mean, if you do them as a list, that'll kind of take your focus off one. But doing the candlestick pattern, seeing that jump out at you is actually a good thing because you're starting to see like, wait, I actually made this more advanced where I give things times weight, times two, times one, even times three. Like so it shouldn't be like if you're at really good support in super bullish support, why should that just be sideways up or up? I guess if you wrote up, that means you could take momentum. But so I guess that covers it. But I don't know. Sometimes I just say like I just imagine it times two, like it gets a higher weight. Anyway, so for this one, candlestick pattern was pretty simple because yeah, see, I posted this at 5:32. I could just go like this. It just took out all this data. So that's a bullish engulfing. So that gets a bullish up or sideways up, whatever one you want. And then support resistance. I said, yes, we bounced off major support, but tonight Bitcoin faces a bull bear resistance zone. That's true. So, let's just keep going with that Telegram thing. Because, yeah, yes, we did see the yellow here is major support. We had that inverse dynamic double bottom that we bounced off of. That was yesterday, though. Now we have this much data, and now we are up in, see how we're up into this bull bear resistance zone up here? So that's why I had that one marked sideways down. Yes, we bounced. So that one was sideways down. So then I said swing leg count. And, this really depends on where your thinking lies because it's like, you have to do, for me, it's like there was a potential, right? That after one leg, two leg, three leg, you could even four, like five, like this, you could even say, okay, the downside is potentially, at least in the intermediate term, short-term exhaust where we can now enter a sideways phase at the very least. So did I give that a magnification? I said, yeah, I see, I said neutral phase. I didn't say times two or anything, but I just wrote sideways because, we're in a phase where I think it's going to mostly just fake people out. So it didn't really give me, so like after this broke, the leg count would be, sideways up because it's the first leg up, most powerful leg up. Hopefully, right? So the next one, I did candlestick pattern, I did support resistance, I said neutral phase. The next one is dog leash. This is just a visual of like when you're walking your dog and it gets too far away, you give him a little gentle pull back and he comes back to you, right? This is just the principle, it's a visual principle of illustrating reversion to the mean. And if you just go, oh, I keep forgetting that I don't have to do that because I did the daily call live and I posted what it looked like. So this is a really good example that I posted this one because you could just see 100% live. You could see what the relative volume was at that moment in time, which actually for that powerful of a day, this wasn't that strong. This was 5% below average. It's not terrible, but you think you want something crazy. So dog leash is just we're at this one. So the other two that we haven't revisited in a while would be these two. So I marked that one up. Bullish. So that one was sideways up. Prior momentum. Now, maybe this is worded in a way that tricks people because sometimes when I first saw this category, I was like, oh, I have to write yesterday's momentum. That's not true. This category is how prior momentum would affect the next day that you're trying to do, right? So trend up follows congestion. What did I mean when I wrote that? Well, we had a trend up day that was a pure trend, really strong up day. I can go on a smaller time frame and show you that it was like a day where we barely had any pullbacks. It seemed unusually strong, and then it went right in. I don't have to say it went right into bull bear zone. That's me combining stuff. My bad. Let's just go back. What was the isolated category again? Prior momentum, right? So anytime you have a momentum, a pure trend day, it's more rare to have two pure trend days in a row. It's consecutive, right? It's more likely, just as a general rule, to have a congestion or a sideways day. I could say, well, especially now that it's at a bull bear, but I don't want to start combining stuff. That's why I stopped myself for a minute. So the prior momentum was bullish, so tomorrow's momentum should be neutral, sideways. I think, yeah. So that one was sideways. Trend up follows congestion. CCI was an obvious hook from extremes. Hit minus 200 perfectly. Oh, I'm sorry, I'm looking at the wrong one. HFE. Hang on a second. I wrote hook from extremes, major support. Wait, where am I at? CCI. Flash green, not overbought. Right, I did the wrong day. I'm sorry, I was doing this day, but when it came back up to here, we had that minus 200 on this day, but then when it came up to here, it's not like it would have been a bearish reversal setup if the CCI looked like this super bearish. One of the most bearish inverse zero line rejects I've ever seen, where the CCI can't get over touches the purple zero, and then you have the huge turbo overshoot. That was crazy. Also, this is an inverse zero line reject, right? But this actually, at this moment in time, when I went back and I backchecked, I said, oh, if I did it like 5 minutes before it closed, or even 5 minutes after, it didn't flash green. I did it an hour before, just FYI. But at this moment in time, I was like, oh, well, it's not really either way because it's not at a hook from extreme, so I'm going to mark it sideways because it's not really a setup either way, and it did flash green here. Well, I guess I marked it sideways up. Flash green, not overbought. I mean, I guess so. It's not really a setup overway. Flash green, not overbought. Yeah, sideways or sideways up would be okay for that one, I guess. Flash green. Yeah, I kind of disagree with myself on that one a little bit there. It wasn't really a bullish setup. It was actually a non-setup. I guess because I overvalued the green thing. Let's see, what did I do here? Flash green, not overbought. Yeah, just because it's not overbought, it's not a setup. Yeah, this one was me being a little, I would say sideways for that because if it's not an identifiable setup and just lukewarm, you can't just lean one way because you're more bullish. You can tell that one might have been a mistake on that one. I'm glad I can go back in time and see what I was really looking at because I have to go back and figure out, am I misinterpreting this stuff? There is a little bit of yeah, there's not a bullish setup here. I don't know what I was thinking. Maybe maybe because I saw this and it was rotating off. I don't know, but that's not a setup. That was a mistake on that one. All right, moving averages. This one's pretty simple. Okay, so we popped above it. So if it came back and touched it a little bit, it was support, right? So that one was sideways up. And even though today's a downtrend day and that did break, if you just like took it there mechanically on first test, you had a quad exit. It's pretty strong bounce actually. Was thinking that I'm like that's too weak. I'm not doing that. Need more things, but it did give you bounced up and then eventually the trend continued like I thought it would. Like why get in it for that? But it was a pretty big bounce. I could show you on a lower time frame on that. If you turn on the hourly after the trend day completes, it looks like complete crap. But if you were trading on the 15, it was like over 1%, 1.5%. But it's like you don't want to get in. You still don't want to fade against that trend. All right, then the next thing we have is a monthly. I marked that sideways. I didn't really show the monthly, but we're in a sideways. I think, what did I write? Hook from extremes above major support, right? But we didn't trend. The RSI is not crossed yet, so there was no. It's just basically in a sideways phase. Hopefully, like a hammer candle. There's obviously not a trend up confirmation in the RSI. The weekly was more bullish because it's at multiple time frames. There was a green hammer, which meant it had higher odds for rotation. The RSI was bullish, cross momentum confirmation, and the RSI divergence is in an oversold phase. That's another indicator. Yeah, so beauty principle was a simple one. I'd have to zoom out, but I'll show you on this one. Around this area, right? We closed here. Well, what did we do when we closed here? Well, there was a possibility of a launching point of directional conviction, a balance breakout. Keep in mind, it wasn't a mature balance. As you're doing your volatility expectation trend ideas that I didn't really list in this. But yeah, obviously a balanced breakout pattern increases the odds for a trend. So beauty principle for me was up. Soon being short, I feel like I could short the recent bull bear resistance zone for a sideways trade action. See, I was already planning that. And then I wrote, well, how would I like being long? I wasn't as confident. I said, can we get 2 consecutive trend up days in a row? we failed before. Going to need to see a lot of upside strength and momentum. Odds are against that, but sideways. Yeah, I mean, there's really no wrong. That's just how your gut feels. You just mark anything for that one. Obviously, the better you get at this, the more your gut will be right, right? Time frame analysis. Short 4 day was neutral, intermediate 2 weeks bullish, and big picture 1 month bearish. I kind of already showed that. When you have a neutral, you know, these have to both be bullish, or these have to both be bullish, or these have to both be bearish, or these have to both be bearish. If they're all neutral, there's nothing, and which means that actually the smaller time frames become more important because like longs and shorts get reversed all the time. And when you have a neutral, a bullish, and a bearish, there's no alignment. So you don't have a concept called time frame alignment yet, which helps you think about what phase of the market you're in, since we're in a sideways phase. Bigger picture pattern. At this point in time, let me see why I considered. I said balance. I was giving like a scenario. I said it's going to be a balance if it fails. It's pretty obvious, but like if you're watching it in real time, you can make it. You can do some actionable things here. Bounce breakout if it does not. I said the mature bounce increases the probability for a breakout. It does, but it wasn't super mature. So for this one at that moment in time, I wrote sideways up because, oops, because I was imagining, okay, it doesn't take much to produce potentially a short-term bounce breakout pattern that could then take us somewhere in this range, not, and then we start going sideways again was the idea. But with the quick scenario that hey, if it fails in any type of topping or a false breakout in real time, then that bull bear zone is back into place again, and it could turn into a trading range, and we can go down more. The RSI stochastic weekly was bullish. I might be overvaluing that because the weekly might cover it, so I might get rid of that. I'm just experimenting with some things that I added, and then besides that overlay, I'm, let's see, I have to type in. Yeah, it's uh, all these things that I look at. Some of this is real time, and then all those I listed a bunch of pre-market conditions for a trend somewhere. Let's see where those are. So those are the things like volatility contraction, and so yeah, I mean that's really what this approach is. It's dynamic. There's a lot of components to it, and the context, like I said on the bottom, the context is always different. There's different relationships. There's always something new, and all must be connected to a holistic view because you'll always try to look for something that's there that maybe in a holistic sense is not going to really be there. You're just projecting something on. So what you have to do is take what is repeatable, that's AKA this system, and try your best to overlay it on top. I say the true keys lies with the proper understanding, its uniqueness, fractals, all that. And then if I go, let's go back to the daily call thing we were looking at. Crazy if that's true. Okay, so yeah, that's pretty much it. So at this moment in time, I did have a lot for sideways. It was almost the same, but the most was sideways up. So that's what I was mostly focused on. It was more of a long entry. But if I went back in time and switched it, I'd mark my CCI here. I'd have 1, 2, 3, 4, 5, 6, 7. Then I'd have 1, 2, 3, 4, 5, 6, 7, 8. It's still leaning more towards this, but there was some room to short at that bull bear zone, which I think I did later, late in the day. But technically, yeah, I did go long that day for a sideways up. And let's just take a look at what happened the next day. Right, we did get a sideways up day where the bulls ended in control of the day. Let's see what that looked like on the smaller time frame. Yeah, so it was more like a sideways day. I think the trades that I posted that day is I think I took this crazy one on first test. No, I took this one here. It was like a 15-minute double bottom because it was a sideways up call. And there was a trade location issue because it wasn't quite. I was really going to get aggressive here. I was going to be fine taking a loss there. I just liked that zone. It had confluence on first test. I said if it bottom builds there, I will go along because it is a wide double bottom, the low of the day here, on top of all the confluence high volume node in the past and the sideways up daily call. But once it did this and it did this pattern, I said, okay, let me wait for it to be down here. And technically, this is a 15-minute double bottom, and another thing that I was thinking about when I was debating whether to go in, even this time because it wasn't at there, I said, well, it's bottom building around the open, and the intraday bias is green, like everything is up. It has so much bias that it can't even get to the low. You know what I mean? So that's that intraday bias category. But yeah, we did get that rotation, and then I shorted, I think, somewhere here. No, I shorted into the next day. No, when did I short? I'd have to go back. There was a short setup too. I can't remember if it was later in the day, like maybe here, and then I can't. I have to go back. I'm glad that I pinned these because I can forget them. But I do remember this um, being a problem, right? And that's why I had that automatic order because like usually after a trend day, you get at least some follow through. Now this one was, you know, the whole day was so exhausted that by the time it got there, it kind of maxed out the range. But remember, these are just general principles. But it made sense that that there would be at least a first tradable reaction at this area. But as it matures and it closes underneath it, that's why there was no longs today. It's just this: the longer you stay under there, the less odds of a breakout. And 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 this one was 1, 2, 3, 4 days. We didn't even get there. That was like 2.5. So does that make a little bit more sense how I went through that? You could just use you don't have to add the three that I did or even the RSI because I think I might delete that because I cover that in the weekly. But that's literally how I do it as a snapshot. I either do it before the market opens, fill that sheet out. Sometimes I'll publish it in the channel, and then every time that I actually look at it, I'm projecting all those snapshots in time, right when I'm like writing about it or thinking about it.
Yeah, it does help. But I think the more you do it, probably the quicker you get it. Like, for example, you were talking about the candlestick pattern, and it was an instant read for you that it was bearish engulfing. But for me, it would take a little bit of time to sit down and look through some charts and some books
Oh,
to come to that
yeah.
conclusion.
Well, I can teach you that one real quick. Like, so it's, a bullish engulfing pattern is basically like, you know, did it take how many candlesticks this is the previous day, right? And it took out the highs, it took out the next day's highs, it took out this day's highs. So pretty much took out all this data. Uh, and that's basically and you could always go here and type in like, and just right? It has to engulf it. Now there is some leeway. Like you might say, well, it didn't really take out the bottom. Yeah, but it took out the next 3 days. It was enough for me. Here's a bearish one. And obviously they're more important when you use the in conjunction with leg count, right? When you're in a high leg count at resistance and you see that, that's a signal to get out. Boom, get out, get in. And don't do what the amateurs do, just like jump in and want to buy there. When really the intraday bias, the sustained momentum is still down. All these other markets are down. You're probably going to get caught in a. This is probably a short setup, right? Because we know 90% of the time they close in the last few hours of the day. It's not even 1 o'clock yet, so we probably have another leg down. So just what are you trading again?
A couple different exchanges.
Okay, yeah. I mean, so are I'm just trying to think. Well, I would say the process is that there is going to be periods where it's difficult, and don't remember, and also it's okay to write uncertain. Like I'm just not certain about this day. I'm staying out, and then you just reinforce that. But yeah, I don't know. So if I was going to do a daily call for tomorrow, right? The candlestick pattern is bearish, right? We took out 1, 2, 3 days. Now it's not like kind of an engulfing pattern, but it's certainly a day that took out a lot of data. That's why even on all these red days, I had to see like on this day, right? This is a buying tail. That's what I call that candlestick. That candlestick pattern would get higher weight. It would be bullish, up or sideways up. The leg count would also help factor in that as well. This day was, the buying tail was less pronounced. But we had a price pattern under bigger picture pattern where you could write that, the double bottom, right? So that's why it's like, well, if we just use candlestick patterns, we'd miss some things. You know what I mean? Remember when I had it like this? And I forget that sometimes people don't always catch all this stuff, but let me go back and show you that. Yeah, right. The price pattern is an inverse dynamic double bottom. Boom. So even though we really didn't have that candlestick pattern we wanted, we have great price pattern, a great bigger picture pattern. And that, you see that trend line acting as support, hook from extremes. That's why, in any jargon or anything, there's a lot of good data and things that to search back here. So do you think your hardest problem is understanding the system overall and how to apply it and then trusting it, or is the actual application of it?
Well, I'd say more of understanding how to fill out the sheet. I mean, I think the system's pretty solid. I've been exposed to it for a couple of years now, so I have a lot of faith in it. But for me to, fill out the sheet on my own and rather than relying on you doing the daily calls for us, I think that's where the confusion comes in. And you're talking about candlestick patterns just being bearish or bullish engulfing, but some of the books I've read, there's hundreds of different candlestick patterns. So for me to try to pick out, that particular one, like I said, it's easier for you. You've been doing it for a longer time, and I'm just not at that point yet. So it takes me longer to fill the sheet out, and then when I do it, because it takes me longer, and there's so many variables in play in my mind, the faith I have in myself filling it out becomes an issue.
Yeah, you could maybe be overwhelmed by all the data points and which ones to focus on. Like sometimes, like the monthly and the weekly are so relevant to that day. It's like, what's the point of that? I get it. You could even write uncertain for that, or sideways. It's not going to affect it one way or the other. Um, yeah, I mean, there's a lot of dynamic moving parts. Like we're basically trying to come in and figure out what kind of day it's going to be. What's the likelihood of the day for that particular day? And you try to and like I've tried it. Like the candlestick patterns can get really um, there's a lot of them, like dark cloud cover, inverse dragonfly doji. So I try to reduce because I don't want to be overcomplicating anything when I'm in an execution state because your brain shrinks. So I want something like buying tail, selling tail, where it's like in the language itself, it is literally telling me what to do. So I use that term all the time. Like that's a selling tail, that's a buying tail, you know, and that's like the main candlestick patterns that I would use. Or, a bullish engulfing is just a big day that takes out 3 days, or a bearish engulfing. What other ones do? Um, yeah, I mean, like the bearish engulfing, if it doesn't completely engulf the entire candlestick, you could call it a dark cloud cover, right? So I can, if you want to like, but I mean, that's not going to make us execute and make money to know all the little nuances of because the guy that wrote that candlestick pattern guy, he doesn't even trade anymore. He doesn't trade. He sells courses and makes his books. Like, this is the product is just someone who's making their living from trading and is just doing it in front of everyone, which adds the stress to it. But you can see, like, okay, here's the system. Take it. It does work. There's weights to it. Fully admit um, that there's a probability to it, and no one really knows the future on any particular system. But the weights do help us get out of trouble more than not. Not to fade against the trend because the sustained momentum is times two, and most people don't even have it. Like they may have something in the back of their mind, like, yeah, I read in a book you never catch a falling knife, but like, are you really systematizing it so you go back to that rule as your form of thinking, so you don't just press it because it feels like it might reverse or something? That's the thing people forget. Like the execution of the system uh, is difficult because of the fight or flight response and your brain shrinking. So it's like you might even forget what your daily call was that day because you got so excited to do something. Um, or it's like even like right now in Bitcoin, right? You might say, "My God, that's a buying tail. What if it just keeps going up?" It's like, well, just because it's at the low of the day doesn't mean you should buy it or near the low of the day because there's a lot of other things you need to factor in than just trade location, right? You have to factor in who's really generally in control this entire day across the market. All the bears are, you know, where's the momentum? That's down. So it's like the bias is down, the momentum's down, because you might say, well, isn't the bias and the momentum always down if they're together? No, because you might have a day where the bias is down, but the momentum isn't against you. I'll give you an example of that. You see this day here where it was like just in general, it just went up here and then down here. If you bought at that moment in time, um, the intraday bias is technically against you because you're buying against price, but the momentum isn't against you because like you haven't even broken the low of the day, right? So but if you bought now against a trend, you have both the sustained momentum and the intraday bias against you, and poor trade location with a really wide stop because you buy near the here, that kind of a thing. So those are the things that you want to take into consideration. You take into consideration what kind of day it is, and then the stat that 90% of the time that the higher the low of a trend day ends in the last few hours. Well, odds are based on that this could be a trend down day. Doesn't mean it has to be. It could be a V, but then we'll wait for it to make a nice wide double bottom and we'll get in on that. Because if you just follow price, it'll be bad. You'll lose. Yeah, I think this is the when it got right to 89,910, which was right here, 89 around, yeah, right when it hit the moving average, it did get this little move up, but nothing big, right? I mean, so this trade, the intraday bias was certainly against me, but based on the low relative volume, this chop that we went up here, like really, was the momentum sustainable against me? It certainly wasn't extreme. You might say, okay, it was against me, but it wasn't extreme, right? Here, anytime you went against anything here, you're going against something extreme. Like if you wanted to buy there, here, so Well, Tim, how it's going to help you, buddy? Trading can be tough. Tell
Oh
you.
yeah, that's for sure. No, I think it's a what you're doing is great. I just have to put more time into it and develop those skill sets myself as well. So it's not a long or challenging road. It's just, dedication to it and looking at it and studying it, a little bit every day.
Yeah, and the crypto markets are just they're just tough. Like, look how tough Bitcoin is to trade. Now let's go back to what I used to trade. Look how clean that is. I mean, if you, I was just like, man, that would have been a nice. I could go back, could see what the AD line was doing. But then, like when you get into a trade, and look how quickly that it works out, one way or the other. And when it's getting moves like this, Bitcoin on the long side is getting, terrible moves. So it's just, it's just the crypto right now is a little tricky, but it's because there's the 4-year bear cycle guys thesis that's affecting a lot of psychology, but that's not really affecting all the new buyers, these institutions, and getting approval. So it might not play out um, like we thought, just from a larger time frame perspective. If we go out, I know a lot of the times we're talking about what the bigger time frame is going to do for an investor or position trader. But today we did a lot of technicals for us day traders because there's a lot of nuance to talk about how to make income producing trades that then could potentially become swing trades. But yeah, I mean, this is confirming blue over orange, but I mean, it could bounce around like it did there. No, it's in the same region. This green is momentum pretty, right around here. So there is some indicators that we're bottoming, but you can see this time cycle did work. I mean, it's like bearish engulfing, pop back up to the shoulder around the time of the inflection point, and then everyone was hoping for the bullish one. But I remember saying to myself, "Man, this is just an inflection point. If it's near the highs, instead of like making a bottom, then it could be a bearish one, even though I didn't want it." And that's exactly what happened. Sure. But just crudely, there is this 100 SMA that a lot of people watch, and we're holding it very nicely for now. So um, all is okay looking on the weekly. Timing wise, 2 weekly is better, and you can see it's still bearish. There's no cross. Uh, Momentum indicator is good, but until this crosses, that's really the 2 week setup does like when this crossed here, the 2 week gave us a nice heads up. There's gonna be a trend crossed here, gave us a nice timing for the trend. A little bit better. I find the weekly is good for the level and the day trading, but for the position and the investor, the 2 week one with the RSI works a little better. From extremes. Tricky spot to be in for sure. But also just going back in time, kind of at this important support zone where it multi-year breakout from 24 and we held in 25. So this is a key level of support. It's obviously battling this trend down, hopefully sideways for a couple more weeks, and then we get a breakout like this. That would be nice. That might look like this. That would take us to May 11th for hopefully by then it'll be a breakout and that would be a sell. That would be something, but 170,000 Bitcoin from here? It'd be a bold move to say that. Let's see. We'll see. Um, Good thing about the system and the application of it is that you don't need to really know what it's going to do to make money. That's where the system comes in. Well, here's an idea I had, and we don't have to do it tonight because it's Friday and you might not want to do it, but if you want to, you can. Well, how about you fill out that daily call sheet before the market opens and I can give you a comment on it in real time.
Okay,
You
yeah, I
might,
can try that.
yeah, I
Yeah.
mean, you don't have to do it tonight, but if you want to, you can go do it, let me know and you can do it tonight. And if you, I mean, you don't mind doing it in front of everybody because I think it would kind of inspire some folks that are feeling a little up and down about the market right
For sure.
now. So, okay, cool, man. All right, well, thanks for coming out. I'm glad at least somebody came out. Or obviously this is recorded for everybody, but it's always good to interact and see where people are at. So, yeah, we'll see you soon. And yeah, whenever you post one, I'll give a comment on it.
Right on. Well, thank you,
All
Matt.
right,
Appreciate it.
take care, man. Thanks for coming out. Have a good one.
You too.